Hi, and good evening to you all. The first pair I want to be looking out for against the new week is the GBP card. And I want us to have a deliberate look into the structure we have here, despite the fact that we have a very simple structure. There is a possibility that price action is likely going to go to the upside from this point. Well, if we look at the structure we have here on the daily time frame, it is very obvious that price action has been on a downward momentum as price continued to respect that bearish trend line I was able to identify after connecting the series of lower highs. However, if we look at the expansion after the rejection of the bearish trend line right here on the 21st of July, it appears that the expansion is reducing as we can see that we had multiple rejection of the 1.53600 level in the last couple of weeks as price has continued to reject that level, giving us an impression that buyers might is likely to come in to take over the price tussle from the sellers. So on the daily time frame, really don't have much to say other than the identification of that bearish momentum drive. So let's see what's happening if we scale down to a much lower time frame, like the 4 hours time frame, to actually see what has been going on in the last couple of weeks. Well, if we scale down to the 4 hours time frame and look at what structure has been giving us since on the 15th of June, I was able to identify this move. I was able to identify a demand zone around the 1.55 area. As you can see, price action was has been respecting that level before we saw an outright breakdown of that level during the first week of July into the demand zone I identified on the daily time frame, where I told you has been holding price action, giving us a sign that we might be having a bullish momentum, but we don't know when that is going to happen. But one thing for sure we'll know from this point is that we had double rejection of that zone at 1.53500 level, and price has continued to find higher highs and higher lows at this point. And one thing we see here on the 4 hours time frame is that price is right at the bearish trend line. As we can see, a lot of indecision happening around this area, making this area a very significant level we want to watch out for during the new week. And why is that so? If we look at the structure we have here, we can see that price has been caught within a consolidation phase around and exactly at the bearish trend line we identified on the daily time frame. So there is a possibility that we could be looking out for a bearish momentum. That is, price is likely going to probably respect that bearish trend line, and we might be seeing a bearish momentum from that area during the new week. Or is it going to be an outright breakout of that trend line, after which a retest of structure should give us further confirmation to join the rally to the upside. So these are the scenarios we want to be looking out for going into the new week. However, before we do, it is very important that I make mention of the supply niche around here at the 1.55 1.5600 level that has been holding price resisted. As we can see, we saw the first one around here during the first week of the month, and then we saw another rejection here during the midweek of the month, and the same thing is happening around here, but we are not sure if the sellers are going to move price action to the downside, or the bullish momentum that has gripped the market in the last week could actually take price out of that structure. So this is what we're going to be waiting for in the new week. We have two signals we want to be looking out for in the new week. The first one is if we see an outright breakout of that structure, that is the bearish trend line here. Then remember, we're not getting too excited at the sight of a signal, as we want to wait for further confirmation in the form of a retest of the key level, or probably that bearish trend line or the bullish trend line we identified here, after which we'll look out for patterns on lower time frame that will support a trend continuation to the upside. Then the other scenario I want to be looking out for here is a trend continuation to the downside, and I want to see patterns in the form of a breakdown of that key level at 1.55700 area, a retest of that level to give me further confirmation that we want to be going bearish on this one. And one thing we want to be taking note of during the new week is the key level at 1.55700, as this will be our guide during the week, as if price continue to oscillate right above that key level, we want to be looking out for bullish potential. And if price continue to oscillate right below that level, then we want to be looking for a bearish potential. So why is our key level at 1.55700? Well, it's very simple. The reason is, if we look left, we can see that that level has been a major determinant of price action in the past. We can see how this area has been a selling niche in the past. And even if we go further into the past, we can see that that area had been a demand zone. We saw it's been a demand zone around this area as well. So with this information we have here, it is clear that this level has been a major determinant of price action, as anytime price comes into this level, we either see a rejection by the buyers or by the sellers at this point to um, dictate price movement. So let's see what's going to happen during the new week. I'll pause the video at this point, and be rest assured that during the early hours of the week, I will be sharing an update after monitoring what participant in the market will be doing during the early hours of the week. If this video has been useful in helping you make your individual decision during this week, kindly support the video by clicking the like button. You would also want to follow me on my TradingView platform at Darksherry, so that you don't miss out on the regular updates I normally share in the comment section. Thank you very much for liking this video, and thank you for also watching. See you on Monday, and bye bye.